Hi there, welcome back to Market Fatafat. Let's keep it going with all the stocks that are in focus. And to give us a technical sense of all of these stocks, we now have Arpit Beriwal, the manager and derivatives analyst at equity research of Motilal Oswal Financial Services. Arpit, thanks so much for joining us. Good afternoon. Once again, of course, Janelle is joining us back on the show. Arpit, coming to you for your first stock, Oberoi Realty is the stock that you've picked out. Last 1 year YTD, 50% gains, very healthy moves coming in. However, last 6 months, a 20% return, so that momentum seems to have slowed down for Oberoi Realty. Nonetheless, over the past couple of weeks, we have seen some very bullish brokerage notes coming in on this stock with a buy rating or strong convicted buy rating coming in. What's your take when it comes to this stock? What are the levels that you are spotting?
Very good afternoon, everyone. So, if you talk about reality pack as a whole, this counter has been quite outperformed. So, realty index has seen a good up move in last couple of weeks. However, if you see last couple of days action, some profit booking has seen in the reality space, mainly due to the heavy indices are down. But if you talk about overall reality as a chart wise, so within the reality pack, this has been a huge outperformer. And looking at the technical setup on the monthly scale, it gave a range breakout above 1900 in the month of October, and post that we have seen a very good rally from 1900 to 2200. However, on the weekly scale, the setup is still strong. On the daily scale, the stock is consolidated in higher levels, and today the indices are down, mid cap, small cap, and large cap also. But if we see, the stock is holding its strength, and multiple supports are intact. So the base of the stock have moved higher from 1800 to now the new base is around 2100. And look at the setup wise, as the market see some recovery from lower levels, and as it stabilizes, again we can see a good momentum towards its new life high towards 2350, 2400 zones. So positionally, we are quite positive on this counter for 2500 plus levels. So that would be a preferred pick within the reality pack. So one can go long at current levels or minor dip between 2230 to 2250 zones, with keeping stop loss of 2150 for an upside move towards 2350 and then 2400 levels.
Alright, that is Oberoi Realty on the charts. Oberoi Realty that has done pretty well, in fact the entire realty pack. But moving on, let's go across and see what Zydus Life Sciences, why is that in focus today? It is because it has received its final approval from US FDA to manufacture and market generic lidocaine and prelocaine cream. Now, the US health regulator granted approval for lidocaine and prelocaine cream USP, which is 2.5%. Zydus Life Sciences said in a regulatory filing exchange that the cream is a topical anesthetic, is used for local analgesia on normal intact skin and the genital mucous membranes for superficial minor surgeries, and as a pre-treatment for infiltration of anesthesia. And on the back of this US FDA approval, Zydus Life Sciences is in focus today. Currently, it has given up all those morning gains, is trading towards the lowest point of the day with cuts of 0.4%.
Okay, so that's Zydus Life in today's trade. But let's talk about another stock that's been in focus, and that's Ola Electric. Now, remember a couple of days, in fact last week, this company has already announced this, but today they have made it formal on the exchanges with a notice. They've announced that they will be expanding their stores to 4,000 locations on Christmas, which is the 25th of this month. The EV maker, under its hashtag Savingswala Scooter campaign, plans to reach out to customers across metros, Tier 2 as well as Tier 3 cities. Through this move, the company says that it wants to offer relief to customers from rising petrol prices, and this campaign aligns with Ola Electric's commitment to democratizing electric mobility and transitioning India decisively away from the ICE vehicles. By leveraging its direct-to-consumer model, Ola is ensuring that EV ownership becomes a reality for every household, breaking barriers to adoption and offering relief from rising petrol prices and high cost of ownership of ICE vehicles. This is what the company has said in an exchange filing. Positive news flow coming in, very rapid expansion plan, a single day rollout of the remaining 3,200 stores upon the 800 that it already has. So it's a very ambitious plan coming in from Ola Electric. 25th December is going to be key to watch out for this stock, but it's given into the market pressure right now. Roughly 0.5% lower is where it's trading.
Alright, moving on from Ola Electric to Uno Minda. Junaid, tell us what's the news flow here?
Well, yes, Uno Minda is in focus as NCLT has approved amalgamation of 3 companies with Uno Minda. So basically NCLT has approved a scheme of amalgamation amongst Kosei Minda Aluminum Company, which is the transferor company 1, Kosei Minda Mold, which is the transferor company 2, and Minda Kosei Aluminum Wheel, which is the transferor company 3. These all three companies will be amalgamated with Uno Minda with their respective shareholders and creditors, and on back of that Uno Minda is in focus, currently trading above 2%.
Alright, moving on then to another stock that is in focus today, and that is Interglobe Aviation, a parent of the country's largest airline Indigo. That will provide a loan of $43 million to its wholly owned subsidiary Indigo IFSC to act for aircraft acquisition. Interglobe Aviation Financial Services IFSC or Indigo IFSC is registered at the GIFT City. Now it is an aircraft engine and ground support equipment lessor, and on the back of this, Interglobe Aviation is in focus today. Again, has given up those morning gains, is currently trading towards the lowest point of the day with cuts of 0.3%.
Okay, so that's the reason why Interglobe Aviation is in focus. Let's talk about the next stock that's in focus from the auto pack. Bajaj Auto is in focus. Positive news though coming in for this company, because today Bajaj Auto has launched 2 new versions of its Chetak electric scooter under the latest 35 series. Now the Chetak 35 series includes the Chetak 3501, 3502 models that's priced at 1.27 lakhs and 1.2 lakhs respectively. Now while maintaining the classic Chetak look of the company, the new version offers more storage space, and Bajaj is offering different variants of the new Chetak ranging from basic to premium models. Both the Chetak 3501 and 3502 are equipped with a 3.5 kWh battery, providing a range of 153 kilometers and a top speed of 73 kilometers per hour. So positive news flow coming in, 2 new launches, but well, 1.25% lower is where the stock is clearly giving in to the market pressure today.
Alright, moving to the next set, the IT stocks. I mean, IT stocks are really taking it in today, on the chin today, despite the good outlook and earnings coming in from Accenture, which is a bellwether for all the IT stocks. Coming to you, Jinnai, give us a lowdown of more on the IT pack.
Well, definitely IT stocks are in focus. Yesterday, Accenture reported its Q1 numbers, and if you look at the overall numbers, it was positive for the street. They have also the guidance for Q2 that is better than estimations, and for full year FY25, the company has actually raised the guidance to full year revenue growth of 4 to 7% versus their earlier guidance of 3 to 6%. Now we have a brokerage note by Citi who have told that on back of that they are relatively giving preference to Infosys and HCL Tech, where they are neutral rated over other stocks. Also Goldman Sachs, they are preferring Infosys and LTI Mindtree. They believe that they will be beneficiaries of the discretionary demand revival, and Nomura has a buy rating on Infosys, Wipro amongst the large cap. However, if you look at the IT pack today, it did open with a gap up, currently has been sold off and has been retraced and actually trading in negative as we speak.
Okay, so that's the reason why the IT stocks are taking it quite poorly in today's trading session. Remember, Nifty IT top sectoral loser also right now as we speak. But let's go across and listen in to Moshe Khatri, the MD and at Equity Research, IT Services and Payments, Wet Push Securities, because he shares his take on Indian IT companies in the wake of a positive read-through from Accenture's Q1 numbers. Let's go across and listen in.
I would say that the tier 1 offshore vendors have really built a very impressive set of accelerators and Gen AI related applications. So from our perspective, they've done a really good job in terms of getting set up and getting ready for when Gen AI kind of work starts really scaling and start materializing into a large, part of the business. So I think in general, the industry is ready. The industry has been very good in terms of predicting some of those trends. So I'm pretty impressed with what I've found. In general, I would say the digital IT services companies, anywhere from EPAM, Globon, Endava, ThoughtWorks, they're also in very good shape to kind of get there. So I'm not really worried about anyone that's kind of being left behind at this point.
All right, with that, it's time for us to slip into a short break. You don't go anywhere. We'll be right back. Market Fatafat, where we are taking you through all the stocks that are in focus today. Let's resume then with the action coming to you, Arpit. You've picked out Lupin for us. Tell us what's on the charts for this counter. I mean, this counter has given some good returns in the last 6 odd months, 40% returns. From here on, where does this stock go? Is it headed towards its 52-week high?
Yeah, if you talk about Pharma index has seen some corrective move in the month of September, mid and October series. However, generally this is the nature of defensive sector. As you've seen some corrective move in the market from last couple of days, Pharma index has been outperformer. Yesterday also you've seen a good defensive move, and within that, if you see Pharma, Lupin has been a stock outperformer. So technically, after corrective move from 2300, it formed a strong base near 2050, 2080 levels. On the weekly scale, it has given a falling channel breakout, and on the daily scale, it surpassed above 50 demand, holding above the same. So today, all the broader and mid-cap indices are down by 1.5%, but the stock currently it's consolidating above 2100 levels. That clearly indicates that the relative strength of the stock is quite strong. And as Pharma index has been quite outperforming, we can definitely expect the Lupin to scale back its previous life highs, that is towards 2250, 2300 zones. So within the Pharma index, Lupin would be a top pick. One can go long at current levels with keeping stop loss of 2080 for an upside move towards 2250 and then 2300 zones.
Pick coming in from the pharma space, which is Lupin for Arpit. But let's move on, talk about Hindustan Construction Company or HCC. This stock is also in focus because the company has approved the closure of their qualified institutional placement, which is QIP, through which they have managed to raise 600 crore rupees. The board has approved the issue of 13.95 crore shares to eligible bidders at an issue price of 43 rupees per share, which is a 5% discount to the floor price of 45.27 rupees per share. Now remember, HCC had launched the QIP on the 16th of December to sell shares to eligible institutions, and funds that participated in this QIP include SBI General Insurance, Society General ODI, Citigroup Global Markets via various schemes, and leading light fund VCC, the Triumph Fund. So all four of these funds have been issued more than 5% stake in this QIP. And that's why the stock is in focus on the back of the closure of its QIP, a 5% discount coming into the floor price, and maybe that is what is biting away at the stock today, 3.5% lower as we speak.
All right, that's HCC down almost 3.5%. Coming to you, Jinay, Mazagon Docks in focus today. Tell us what's the news flow here.
Mazagon Docks shipbuilders in focus. The company has actually commenced a production activity for the first of its 14 fast patrol vessels for the Indian Coast Guard. Also, the project value for this particular project is 1070 crores. Additionally, they have also commenced in production of a second out of 6 next generational offshore patrol vessels, which is FPV, and the total project cost for this particular project is 1614 crores. The first vessel of FPV is scheduled for a delivery in March of FY26. So that's why Mazagon Docks Shipbuilders is in focus, however currently trading in a bit of pressure.
Dock in pressure on the back of that news flow. However, the news flow is rather positive. But Arpit, coming to you now, you've picked out Trent. It's been a high flyer. What a gainer and what a year 2024 has been for this stock, because this stock has also more than doubled itself when it comes to just YTD moves. But you know, it seems to have lost that momentum at which it was growing earlier. Tell us, what's the view coming ahead for the charts? Do you believe that this rally that the stock is seeing can be sustainable heading into next year as well? Because this stock has done very well, but it has also slowed down significantly now.
As rightly said, if you see the trend of the stock has been very huge outperformer. So since last almost 1 year, we have seen a stupendous rally from 3300 to almost 8000. However, as we've seen a corrective move in September and October and November series, the stock corrected from 8200 to 6000, and in the last week we have seen good recovery from lower levels. So if we see the monthly setup, the setup is strong. It has seen a corrective move from higher levels and good recovery from lower levels. In the weekly scale, if we see, the stock is consolidating from last 3 weeks between 6800 to 7100. So overall, the base of the stock has moved higher from 6500 to 6700, and on the immediate basis, I think, look at the setup wise, we can definitely expect good rally of 7 to 8% from current levels. So Trend would be a preferred pick within the consumer fashionable space. One can go long at current levels with keeping stop loss of 6700 for an upside move towards 7150 and then 7250 levels.
side is what Arpit is spotting. A preferred pick from consumption is trend for Arpit. But let's move on. Talk about Maruti Suzuki, because the company is in focus because they will showcase their first electric car, the SUV Vitara's electric version e-Vitara, at the upcoming Bharat Mobility Global Expo in 2025, as it steps into the electric arena and intensify competition. The e-Vitara will cater to both domestic and global buyers, and Maruti has earmarked nearly half of its production for export. The electric version of this car is built on the Heart Tech E platform, which is specifically designed for battery EVs and offers superior driving experience. This is what the company has said. Maruti Suzuki said to reassure buyers over accessible charging, the company will also be bringing in-home charging solutions as well as a nationwide network of fast chargers available at dealerships and service touchpoints. Positive news flow coming in, foray into the electric vehicle space for Maruti Suzuki. However, the stock is trading rather flat, not doing very well given where the market is headed today. So this news flow seems to be quite incremental for Maruti Suzuki today.
Alright, that's Maruti Suzuki on the back of that news flow. But staying with the auto pack, Hyundai Motors is what you picked out for us. Chennai, tell us what's the news flow for Hyundai Motors?
Well, as Hyundai Motors India Limited is in focus, the company becomes first automaker to offer made in India AGM battery technology. Now, this has been procured under Hyundai Motors existing procurement agreement with Amara Raja Energy and Mobility. What they aim is to equip its model with an indigenous manufactured AGM batteries in Q4 of FY25. Additionally, they've also signed a binding agreement with Exide Energy Solutions, which is a subsidiary. Now, this is basically for a production of supply of battery cells. So, on back of this two news flows, Hyundai Motors India will remain in focus.
Okay, so that's the reason why Hyundai Motors, Exide as well as Amara Raja, all the three of those stocks are in focus. But moving on, then Arpit, you picked out Indian Hotels for us, IHCL. Last 6 months, it's done decently well for itself, a 30% return coming in. Year to date, the stock has also doubled in price. Tell us what's the outlook on the charts going ahead. What are the levels that you're spotting?
Over the hotel space has been quite outperforming, and if you talk about Indian hotel particularly, this stock has been a huge outperformer within the entire hotel space industry. So that clearly indicates the price pattern also. If you see from last couple of months, we have seen a very good rally from 700 to almost 880 levels. On the monthly setup, with the trend is still strong. On the weekly setup, some profit booking on the daily scale we have seen. However, if we see the base of the stock can move higher from 750 levels to around 780, 790 is a new major support zone for the stock. So looking at the overall setup, because of some weakness in the broader market, we are seeing some pull off from the higher levels. But going forward also, our outlook is quite strong in this space, and Indian Hotel is likely to outperform in couple of months going ahead. So we would advise to go long on this counter at some lower levels, near 830, 840. That would be a better risk reward. So one can go along in between 830 to 840 levels with keeping stop loss of 800 for an upside move towards 900 plus zones.
Alright, that's Indian Hotels on the charts, but coming to the stock, which has fallen over 9% today on back of weak management commentary, and that's Siemens India. And the management says that the private capex has not picked up meaningfully over the private capex that has remained decent in semiconductors, batteries, EVs, but remains slow in the traditional technologies. The railway business seems to be slow domestically. Exports are going to see a pickup in 1 to 2 years. The energy business seeing strong demand from transmission segments, but due to shift to renewable segment plus the HVDC segment, that is expected to be a major growth driver going forward. Now, the big negative news coming in is that the company is not participating in the LCC or the line commuted converter that tenders in India or even globally, but are present in the VSC or the voltage source converter segment. And the company currently projects are mostly on LCC, while the VSC projects are not very material. And on the back of that, we see the stock blow out in trade today. Analysts also feel that they're positive on Hitachi Energy plus GE, Vernova TD. They have both LCC plus VSC, so that's a negative coming in for Siemens India. Now, the company's digital industry business is facing headwinds due to semiconductor shortage and some levels of destocking led by customer margins for the quarter in digital industry segment, and declined due to the pricing pressure and unfavorable product mix. And on the back of that, Siemens is reeling under selling pressure.
Well, lots of pressure building up on that stock, but we'll wrap it up on this edition of Market Fatafat by talking about that stock that was tanking away in today's trade. That was the last stock we wish to highlight today. On that note, thank you Arpit, Amar in the previous segment for joining us, as well as Jinay for joining us on Market Fatafat today. We'll wrap it up and we'll take your leave, but you stay tuned to ET now because closing trades takes all the action ahead.